Good afternoon. This is Oliver Slow, Blue Line Futures, coming to you from the Chicago board with another episode of the 2-minute drill. Before we get into today's prices and headlines, do want to remind you, if you have not subscribed to our YouTube channel, head over to youtube.com, search Blue Line Futures, hit that subscribe button, and please turn on those notifications. My other colleagues in the office put out a lot of great video content as well. So we cover not just the agricultural space, but also the outside markets, including precious metals, energy, stock indices, etc. So if there's a market out there, there's a good chance we cover it, and if not on video, probably on print. Again, head over to youtube.com, follow Blue Line Futures. We do appreciate your support. Now that we got that plug out of the way, we can go ahead and get into today's closing prices. And for grains, it was a bit of a mixed bag. We had March corn futures up 1 3/4 cents, settling at 441 3/4. We hit trend line resistance from those October highs, and it just feels like this market is coiling and potentially getting ready for a bigger directional move. And we talked about this in length last week, not just in our daily written commentary, but also interviews, how we're, coiling in a wedge. If you draw a trend line from the August lows and then a trend line from the October highs, you can see we're at a little bit of a sideways triangle, and those trading ranges are getting narrower. 442 is the upper end of trend line resistance. If the bulls can achieve a closeout above there following tomorrow's WASDE report, potentially that spurs the momentum back to the upside. However, a failure there probably takes us back towards the lower end of the recent range near 428. So that's what we're kind of looking at for corn ahead of tomorrow's WASDE. Over on soybeans, the March contract down 3 3/4 cents. Similar situation there as far as the technicals go. More of a sideways range-bound trade. We tried to poke our head out above $10 today, which is psychologically and technically significant, and we really couldn't find any new buyers up there. So we saw the market retreat and finish moderately lower. Again, ultimately, I think both these markets, corn and soybeans, just looking for maybe some potential new news to nudge the market in a direction other than sideways. And over on the wheat side of things, it was actually a positive session. We saw March Chicago wheat 1.5 cents higher to 558 3/4, which is constructive, following last week's attempt to mark what could be an intermediate term low from Wednesday, where we made new contract lows, close higher, and then saw follow through buying on Thursday. That short-term low remains intact. Whether or not it's a longer-term low, still to be determined. Now, as far as the newswire goes for today's grain headlines, export inspections were out this morning. No flash sales, but we did get weekly export inspections for corn and soybeans. Those were largely in line with expectations, and the usual suspects were at the top of the list: Mexico for corn and China for soybeans. Wheat inspections, disappointing, 226,000 metric tons. That was below last week's number and below the low end of expectations. Also on the fundamental headlines, South America planting, Brazil, their first corn crop, 95% planted. Brazil soybean planting, also 95% planted. Now that crop is nearly 100% in the ground, those weather forecasts are going to continue to be watched very closely. Right now, doesn't look like the threat level is very high for concerning weather. So I think you could potentially, paint that as a lot of bearish news baked into the cake. We saw some estimates over the last couple of weeks for South American production, and there are some lofty numbers out there. Some of those estimates potentially priced to perfection. Where the USDA is at, to be determined on that. But again, if any hiccups do arise and things do start to dry out here in the next 2 to 4 weeks, potentially that adds a little bit of a risk premium to the market as well. Now, I mentioned the WASDE report. It is out tomorrow, Tuesday, December 10th, 11 a.m. Central Time. We do have those estimates posted on our website, so if you're looking for those estimates, head over to bluelinefutures.com. You can find your convenience tables there. Wrapping up on the grain side of things, commitment to traders update. Corn, net long 88,000 contracts. Soybeans, net short 72,000 contracts. There's a little bit of a flip there, and I think it could be the potential hinting of an unwind of the spread between long corn and short beans. It'll be interesting to see if that continues through this week and into next week's trade as well. That's been a popular one, I think, for funds here recently, so it'll be interesting to see if that trend remains intact, or we see a bit of an unwind. Potentially, tomorrow's WASDE report gives us some direction on that front as well. And then over on the wheat side, net short 69,000 contracts. That's the largest net short position since the summer. Very far from a record, so don't get too excited about that. Now, over on the livestock side of things, closing prices, live cattle, we had the February contract 85 cents higher, 187.02. January feeder cattle 2.5 cents lower to 255.80. Looking out to the deferreds, they finished higher from March all the way out through May. And then on the snout side, it was a lower day. February futures 82 cents lower to 86.50. We wrapped up on the commitment of traders for grains, going to do that for livestock as well, as that has been a hot topic here recently. Live cattle, 122,000 contracts, net long, the largest since 2019, but that 2019 record, 155,000 contracts. So live cattle, a lofty net long position from the funds, but far from a record. Feeder cattle, on the other hand, right at about 19,000 net long, the largest on record. It goes back to 2012, where funds amassed a net long position of about 22,000 contracts. So a little bit closer to a record there in the feeder cattle. And over on lean hogs, it is a smashing record, 133,000 contracts long, nearly 30% above the previous record. And we were on RFD TV this morning kind of talking about, man, even the biggest bull in the market has to have some caution flags up with the risk of long liquidation the way it is in all three of these markets. We've been saying for a while the fundamental case is strong and stout for all of these, but if there is an outside market event, that could trigger some long liquidation, or even a technical breakdown could trigger that without any real change in the fundamental landscape. That would not be the first time we've seen that happen in the livestock complex. So that's what we're looking at to start the week. If you have any questions at all, please feel free to reach out to us. My direct line, 312-837-3938. You can also email Oliver at Blue Line Futures. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors.